My name is Michael, and welcome to another episode of the Market Pulse. Today we're going to be discussing, is the stock market really crashing? Let's get right into it. Alrighty, for this week's market calendar, on Monday, not too much is happening. Nothing posted for that. Tuesday, we have job openings with a forecast of 7.7 million. Previously, it was at 7.7 million, so no change there, which is a solid thing. Wednesday, we have this Liberation Day. Trump is to impose 25% tariffs on all car imports, as well as these retaliatory tariffs to be imposed on all U.S. trade partners. So, big sell-off on Wednesday. Don't enter the market, but there's always a bull market somewhere. And there are certainly stocks that you can look at that I've discussed in previous episodes. Thursday, nothing posted there. Friday, we have the U.S. unemployment rate at 8:30 with a forecast of 4.1%. Previously, it was at 4.1%, so no change there. Also at 8:30, we have the March job reports. February, the job reports came out and some sell-off was occurring. Now, we were starting to already see sell-off in the market due to Trump's tariff plan, so don't really know too much whether the March job reports will create a sell-off, but I think the sell-off's already going to be occurring through this Wednesday's Liberation Day. Now, the last month, the market has been struggling pretty severely. The NASDAQ is down 5.62% below its 200 moving average. The S&P 500 is down 4.07% below its 200 moving average, and the Dow Jones is down 2.75%, right at the 200 moving average. Now, the Dow Jones is more heavy on the financial side of things, so they haven't been hit as hard. The NASDAQ is more on the consumer discretionary side of things, and consumer discretionary, that sector has been struggling very severely as consumer spending has softened due to these rising concerns of recession. Now, the economy isn't in the worst place, but it definitely is struggling, and I'm seeing it struggle. I'm seeing people around me, just people in my life, definitely start to struggle, have to pick up new jobs, and this is never a good thing for the market, and not a good start for President Trump, primarily due to the tariffs that he's imposing and this huge fear of stagflation that's being slapped right on to his tariff plan. Now, is the market really crashing? No. So we're still in a correction territory, right around that 4% decrease for all of these indexes combined. A correction has an average of a 10% decrease. A crash has an average of a 40% decrease. I don't think we'll see a crash. The last time we saw a crash was in 2008 during the dot-com bubble. Something very severe has to happen. Now, we are reaching bear market sell-off, and I'm seeing companies definitely hit this bear market, which has an average of a 33% decrease. So there's no doubt the market is struggling. Crash? No, we're not seeing a crash, which is a good thing, but we're definitely seeing a correction. Corrections are healthy. But now it's starting to become not healthy as we are starting to reach this bear market sell-off. Now, what will happen in the future? This is really hard to determine. It's, like I said in the previous episode, it's like a dense fog. You can't really see through it all that much. Now, it's a little bit denser with Wednesday's Liberation Day. We know for a fact that there's going to be a sell-off. More fear is going to be flooding into the market. There's already fear flooding into the market, but even more with these 25% tariffs on all car imports, as well as the retaliatory tariffs on all U.S. trade partners. Now, I agreed with the tariffs in the beginning, create some more favorable trades for the U.S., which we have not seen. Also kind of boost production for the U.S., but now it's starting to get a little bit damaging, and that gets that big buzzer because the market is struggling. A lot of fear, like I said, is flooding into the market. You can't find any optimistic news, financial news right now. All these financial news sites are posting Trump every single day. And, I mean, we're seeing like 25% tariff, 20% tariff. There's really no sign of it stopping. Now, I think once we start to recover is when Trump stops or eases off his tariff plan. Don't know when that's supposed to happen. It was stated by analysts that tariffs are hitting the highest level since the 1940s. That also gets the buzzer. Like I said, I liked the tariffs in the beginning, but now it's starting to get quite damaging for the economy and the market. Stagflation has been slapped right onto that tariff plan, or all the tariffs imposed by Trump. Now, we're really not in the worst economic shape, but like I said, I mean, people are struggling, and we are seeing a slowdown. And I feel like right now, like, we should be in times of some pretty significant growth. I know that growth is going to slow down in the next up and coming years or decades, but right now it shouldn't stop. Stagflation, I don't know if we're really hitting that stagflation mark. The economy is definitely starting to slow down. I guess in a sense we are. That also gets the buzzer, but I think we will start to recover, like I said, once Trump starts to ease off this tariff plan. So maybe April. I mean, the targets for the S&P 500 aren't that hot right now. And I think on average we're maybe hitting a 4% to 8% increase by looking at the S&P 500 for this year's total return. Now, there's no doubt in the next Fed meeting they're going to be increasing interest rates, which will just put more downward pressure on the market. So maybe look at some bonds, some short-term bonds. That may not be a bad play. Pretty sure that the interest rates will see a hike this year. There's no doubt with the significant pressure on inflation right now and prices rising. Now, like Jim Cramer says, there's always a bull market somewhere. And like I previously said, there are bull stocks, bullish stocks. Bowhead Specialty Holdings is quite bullish. Antero Midstream, which is a oil and gas company in the U.S., is quite bullish. This is a good learning experience for me as I'm a young investor, and for you guys. Like, if I definitely narrowed down and saw what Trump was going to impose, I could have seen this a while back and invested in certain companies like Antero Midstream, which focuses on oil and gas production in the U.S., which has been a very bullish stock in the last couple of months. This really isn't a bad time. We're still in this correction territory. We are we're by no means in a crash. So just you're getting a lot of these companies at a good discount price. Stick with companies with a good fundamental story. Some of the big hitters: Amazon, Costco. You guys know I love Costco. I talked about it in some of my previous episodes. You got it at a discount, and now it's starting to recover. It's starting to go back up. Don't know if it will fully recover till the broader market starts to get out of this correction zone, but some really good discounted plays. Most investors during these times start to sell off, but it takes a lot of grit. And what will put you apart from other investors is to stick with the market and continue to buy good companies with good fundamental stories, like I just said. And strong companies will no doubt recover, and they have recovered. We've seen corrections before. We've seen bear markets before. And some of these strong companies have recovered, and you're getting them at a discount. I mean, you can't complain about that. Take everything with a grain of salt. The financial news is always going to focus on pessimistic stories. So just focus on good companies and don't get too involved in all of this pessimism that is flooding the market and all the fear that's flooding the market. Now, there certainly are some still stock plays. Like I said, Bowhead Specialty Holdings, it's on quite the rise. It's at a PE multiple of 35.41, so not that bad, and certainly a bull market. It's been able to perform very greatly during this severe decline, so it shows strength. The balance sheet looks tremendous, like I said, and if interest rates do rise, which they will, most likely, that's my analysis on things, this will benefit them very severely. They're an insurance company, so a lot of their investments are directed towards bonds. So any increase in interest will increase their investment profit. Now there's some other ones too. A lot of people are right now in time of fear flooding towards these dividend hitters. I've said this before, but the Charles Schwab U.S. Dividend Equity ETF. I love ETFs. They're great. This one pays a great dividend at a good price. Right now, it's at a pre of $27.89. So buy some good shares in that company, in that ETF, excuse me. Don't focus on the price that much, and you will get a very, very nice dividend payout right there. There's also other ones, Coca-Cola. I was in my local supermarket the other day, and they brought back those name bottle things. You probably know what I'm talking about, but they're such a good company. They've been operating for decades, and right now they're showing strength through these struggling times. They had their earnings a couple months ago, which came out very positive, so their price increased and they're bullish. But another good company. Probably wouldn't invest in it right now. It's kind of high, and it has a PE multiple of 28.6, which isn't bad, but you're not getting it at a discount because the share price has soared. Some of the other ones, Microsoft has been declining, but not a bad play. Also, Amazon isn't the worst. If you want to just have a safe play, invest in the Spider Dow Jones Industrial Average or the S&P 500 ETF that Spider offers. Another good play, safe bet, and it will no doubt recover. That is for sure. Right now, though, for the short-term look at things, it's going to go down, especially with this Liberation Day on Wednesday. Overall, that's pretty much all I got for you guys. I mean, stay optimistic. It's hard to right now. The market is struggling pretty severely. But I think eventually Trump will start to ease off this tariff plan. Don't know when that is. Maybe mid-summer, hopefully May, or early May, maybe August. Who knows? Hopefully before that. But yeah, I think that the market will recover, and there are some pretty good plays right now that you could invest in. So that's all I got for you guys today. I hope you enjoyed. Make sure to drop a like, subscribe, and drop any comments, questions, or concerns you have.